With the age of the FANG stocks coming to an abrupt close, it is time to welcome our new overlords, the BANG stocks. No! What's up guys, it's Fred again. Welcome back to the channel and the hobby. That intro just now was obviously just a joke, so I genuinely hope you didn't take it seriously. And so in today's video, I will instead be covering my top 6 stocks for the month of February 2021 and shortly thereafter. Now, as a quick disclaimer, this video is merely based on my own research as well as my personal so-called investments and is in no way financial advice of any sort, and the video itself is meant for entertainment purposes only.
Right.
Real quick though, before we start, and despite what I said about the introduction, I do want to just very briefly touch on the whole Wall Street bets and GameStop situation. First of all, I want to say that I'm very likely not going to be touching any of these heavily shorted stocks.
It's only a game.
And even though I am all for the retail investors standing up against the market-making hedge funds, I do believe that the risk is a bit too high right now, especially with brokerages like Robinhood restricting the number of shares that you can buy of these stocks. And when the stock prices go down, this could cause something called a margin call for those on margin, which could then force them to sell some of their shares, which then would cause the stock prices to drop even further. Now, Mark Cuban himself did an AMA on the Wall Street Bets subreddit regarding this topic and explaining exactly what I just said, which I highly recommend you check out if you're actually interested in the issue. Needless to say, it is indeed a very encouraging one for us retail investors, especially ones who are invested in the BANG stocks. And with that out of the way, before we get into my first stock pick of the day, let me first give you the general formula. First of all, I'll briefly explain what the company does, followed by some of the most exciting developments that I believe make the stock worth buying, and then I'll go over some technical analysis with how the stock price is doing as well as its valuation. And finally, if need be, I'll also explain some of the risks entailed with buying the company.
It's showtime.
And now, getting into our first stock, we have General Motors, ticker symbol GM. Now, I understand that GM may not technically qualify as a growth stock because of how long it's been around and how large it's gotten. Do hear me out because there are a lot of exciting things coming to the company.
Trust me.
But first, in case you don't know what General Motors is all about, it is one of the largest automotive vehicle manufacturers in the world, owning brands such as Chevy, Buick, GMC, and Cadillac. And not only that, but GM also owns significant stake in multiple ventures across the globe, including in China, where it actually delivered over 2.6 million vehicles in 2020 versus the 2.5 million vehicles it has delivered in the US. Next, moving on to some of the very exciting prospects for the company and why it sort of qualifies as a semi-growth stock in my opinion, is that GM is going to have an absolutely killer combo of EV vehicles with autonomous driving, with over 30 different EV models being planned across its many brands over the next 5 years. On top of the fact that with their Cruise autonomous vehicle subsidiary, GM is already testing out driverless autonomous vehicles in the city of San Francisco. Plus, they've also recently joined up with none other than Microsoft, who jointly with them invested another $2 billion into the Cruise project, bringing the total valuation of the Cruise subsidiary to $30 billion. Now, the very exciting and potentially groundbreaking thing about the idea of Cruise is that GM doesn't just plan to have autonomous driving with consumer vehicles, but they also want to have autonomous ride-sharing as potentially a means to replace car ownership altogether.
Nice.
This goal is very ambitious, and it's probably quite hard to tell what will happen in the future, but I do have confidence that Cruise will enable cheap, efficient, accessible, and disruptive ride-sharing. Moving on, taking a quick look at General Motors' stock price, it is currently trading at what I believe to be the all-time high at around $52 to $53, and it's actually gone up around 20% over the past month or so on some of this Cruise news. Its revenue has been quite constant for the past few years, but with a PE ratio of around 23 to 24, and with the growth prospects for it in the near future. Moving forward, I would be comfortable with buying in at dips as an EV and autonomous vehicle play that is not a SPAC nor a company that has yet to produce any vehicles. Now, I am also invested in Tesla, but I also really like to expose my portfolio at least somewhat to some of these more stable plays that aren't priced to perfection for years down the line. Moving on to the second stock on my list, we have AMD, ticker symbol also AMD. It is a semiconductor company that makes chips for both computers for businesses as well as everyday consumers, for which some of its main product lines include CPU chips as well as graphics cards. Now, some of the main things going for AMD is that first of all, its revenue growth has continued to see a lot of momentum with 45% revenue growth in 2020 and projected revenue growth of 37% in 2021. Plus, it has continued to gain market share against its main competitors, Intel and Nvidia, in both the CPU and graphics card departments. Plus, it is poised to acquire Xilinx, which is another semiconductor manufacturer, with the deal expected to close out at the end of 2021, which is not only going to allow AMD to better compete against, again, Intel in the 5G cellular and data center markets, but also make producing parts and chips a lot more efficient due to AMD and Xilinx sharing the same semiconductor part foundry, TSMC, or Taiwan Semiconductor. By the way, TSMC being the largest semiconductor foundry juggernaut is actually one of my honorable mentions for today, and I'll actually link up Sven Carlin's excellent analysis of the stock in the description box of this video. Anyway, another reason that I'm very bullish on AMD is that I actually had to build a new PC recently, for which I had to research a lot of the parts that would go into it. I've realized that not only for both professionals and gamers, most people do recommend using AMD CPUs, like this baby right here, the Ryzen 5 3600X. Well, technically, the chip is inside my PC right now. But anyway, the other thing is that there's actually a great shortage of AMD chips as well as demand for them, both not only for the newer generations, but also for a lot of the older generations as well. And to me, this is a decent indicator of future revenue growth due to the fact that AMD isn't currently necessarily producing to demand, which may actually increase further into the future. Not to mention, there has also been increased demand for AMD's graphics cards, which has largely been a space dominated by Nvidia. And what I believe AMD to also be doing, and don't quote me on this, and I can't really find any real articles that talk about this since I actually heard about this from another YouTuber. But anyhow, what AMD I think is doing is that they're actually creating some sort of synergy between their graphics cards and CPUs, where if you use both of their products, it actually greatly increases the efficiency or creates some new features for you to use if you use both products, which not only increases the likelihood of people buying both chips from AMD, but also seeks to keep them in the ecosystem.
Why make trillions when we could make billions?
Real quick, jumping over to AMD's stock price, it is currently at somewhat of a dip at around $89, which is below its roughly all-time high at around $98-ish. And especially with a PE ratio of around 43 for a growth stock like AMD, I believe that any type of dips like these are worth buying into. And just to touch on the risk of investing in AMD really quick, the main factor to look out for is again competition with its main rivals Intel and Nvidia, both of which, by the way, I own shares of.
What?
However, for many of the reasons I've already mentioned, I am quite confident in AMD's ability to stay competitive and even pull ahead. Going on to stock number 3, we have a bit more of a speculative one, and it is Nano Dimension's, ticker symbol NNDM. It is a company that produces 3D printers and associated products that actually sell to other companies for them to be able to very easily and efficiently conduct circuit board prototyping. And Nano Dimensions is indeed a disruptive business because these 3D printers actually allow companies to be able to prototype their own chipsets in-house without having to actually outsource to other companies, which not only saves them time and effort, but also likely the costs as well.
I want that.
Plus, this type of really precise 3D printing technology has a lot of applications across a wide variety of industries, including healthcare and automobiles. In fact, let's actually listen to Kathy Wood herself from ARK Invest, what she has to say about this technology.
3D printing is a big part of that fund. 3D printing can cut those costs by up to 90%, as well as lower the weight and form factors of the various parts in engines and shrink the number of parts. The other area that 3D printing has changed completely is in the medical space, hearing aids. I think 95% of all hearing aids in the world are 3D printed. Well, there are many medical many medical applications, ultimately hips and knees and, that are going to submit to 3D printing.
Oh, and before I forget, Nano Dimensions is indeed one of ARK's larger holdings with almost 7 million shares to date. And as for Nano Dimensions' actual business model, by selling these 3D printers to various companies, they're actually able to sell additional products to them, namely the 3D inkjets as well as the nanomaterials used for the 3D printing. And so if Nano Dimensions can maintain this foothold in this technology moving forward, I do foresee a lot of profitability for them.
Of course!
Plus, unlike a lot of other speculative plays that may have some promising technology behind them, but have yet to really have any sort of business going on, Nano Dimensions has already sold 60 of their machines, which doesn't sound like that much, but to very prominent clients around the world, including the US Department of Defense. Now, taking a quick look at Nano Dimensions stock price, it is currently trading at more of the higher end, which is kind of close to its all-time high of $17.89. However, based on recent trends, the stock price has fluctuated quite a bit and has seen several recent dips, which I have bought into bit by bit. But do keep in mind that Nano Dimensions is more of a speculative play, and thus I have sized my positions relative to the rest of my portfolio. Plus, you can also expect to see quite a bit of volatility with the stock price. Going on to stock number 4 on our list, and this is going to be a quick one because I've actually covered this stock before, and I know that many other YouTubers and even news articles have covered this extensively, and it is Alibaba, ticker symbol BABA. As you probably already know, Alibaba is the largest e-commerce player in China, and they are also heavily involved in other ventures as well, such as cloud computing, in which they actually grew by quite a bit, as reported by their most recent earnings. But despite beating significantly on earnings and also seeing their cloud computing revenue growing by over 50% year over year, their stock price is still suppressed, likely due to the regulatory pressures from the Chinese government. If we check out the stock price, it's been fluctuating as of late between the 250 range and the 260s, although as of the recording of this video, it is about to hit the 270 mark, but that is still quite a ways off from its $320 all-time high. Plus, most Wall Street analysts are still extremely bullish on the stock, with 62 analysts out of 64 iterating either a buy or strong buy rating for the stock. Now, there still is a bit of a risk with the Chinese government really cracking down on so-called monopolistic practices of big tech companies. And as a result, if any of these Wall Street analysts then change their ratings as well as price targets, that could actually add additional pressure to the stock price as well. But one thing to be very optimistic about for the near future, in my opinion at least, is that Ant Financials, which actually had their IPO blocked by the Chinese government, and it's also a major subsidiary of Alibaba, has actually stated that they are actively trying to comply with some of the regulations set forth by the Chinese government, and are actually going to reveal some of their concrete plans as soon as next week regarding how they're going to be operating moving forward. And as you know, more certainty for a positive outcome usually bodes well for a company's stock price.
Of course!
Going on to stock number 5, and this is again another stock that I've covered recently as well, so I'm not going to spend too much time on it, and it is Activision Blizzard, ticker symbol ATVI. It is one of the largest and most successful video game producers in the industry, and one of the main reasons I want to bring it up is that it's got a potential major catalyst coming up, and I also believe that there's a lot of potential upside for it in the long term. First of all, the company's 2020 fourth quarter earnings will be out by the time this video comes out, so be sure to pay close attention to it if you're looking to buy ATVI stock. First of all, if the earnings don't turn out as expected and the stock actually dips, I do believe that this presents a decent buying opportunity. And if say the stock price gaps up due to a good earnings, although this rarely happens with ATVI stock, the price usually goes up or down pretty slowly. But if it actually goes up, I would then wait for a dip buying opportunity to then hold it for the long run. And that is because I am quite bullish on the stock due to, in my opinion, not yet priced in games, new franchises, as well as more importantly and more significantly, its expansion into mobile gaming as well as esports. And yet another potentially major catalyst that is coming up after laying low for a while is that on the 19th and 20th of February in 2021, they actually have an online only event called BlizzCon Line that is actually going to be free, which is unprecedented because previously they actually had people go to the venues and actually had to buy tickets to get in. But this time, because the event is not only completely online, but also free for everyone, there is going to be more exposure and more eyeballs on whatever projects and new games and whatnot that they will inevitably reveal, which could definitely be good for the stock price if they actually announce something surprisingly good. And finally, last but not least, onto stock number 6, we have one that has been covered quite extensively by other finance YouTubers, and it is Tattooed Chef, ticker symbol TTCF. It is a plant-based foods company with a very cool name that is getting a lot of mainstream popularity and attention lately, and is actually valued significantly cheaper than a bigger name like Beyond Meat. By the way, I also love Beyond Meat as an investment, and I have indeed invested into it, and I actually talked about it in my previous stocks to buy video as well. And although I don't quite have the hands-on experience with Tattoo Chef as I do with Beyond Meat since I currently reside in Asia, I still like Tattoo Chef for many of the same reasons that I like Beyond Meat as a plant-based foods play. And I do know that based on my research, Tattoo Chef has been seeing significantly increased prominence and demand across many major retailers in the United States. Now, taking a quick look at Tattoo Chef's stock price, there isn't too much to speculate in terms of things like PE ratio because of how new of a company it is and the fact that it's still actively growing. But from a purely technical analysis standpoint and the fact that there hasn't been too many catalysts to move the stock price significantly, I've just been comfortable with buying at the swing low of roughly $23 and just adding shares to my position over time. And lastly, if you want to check out a very in-depth bull case on the stock, I'll actually link up Matthew Kuo's wonderful video on this in the description of this video. And those are my top 6 stocks and a couple of honorable mentions that I'm buying in the month of February. Just a friendly reminder that trading platform and app Webull is currently offering 4 free stocks for a limited time, 2 when you actually sign up using the link below, and 2 more when you deposit at least $100 into your account. Anyway, thank you so much for watching this video. Do let me know what you're investing in this month as well in the comment section below. And with that, I will see you in the next video. Peace.